Hey everybody, what's up? I'm Sureshni Ryder. Welcome to another edition of Boston Broadcast. This time we are in a session called All Accounted For. I think I'm all accounted for. I have my tea, I have my pen, and I'm ready to chat with an amazing human being. Please welcome Bee, and she is actually representing the Faculty of Accounting. We are doing accounting. I'm so excited to be with you, Bee. It's going to be amazing.
Thank you for having me.
And you know what? All Accounting For is a session that just looks at whether you're balancing books or you're just learning to balance life as an accounting student, you are in the right place. And we're going to break it up in small little palatable pieces for you because you can't eat the elephant in one day, okay? And this is how we're going to do these sessions. In today's session, we're going to look at three primary things. We're calling it Bottom Line Bulletin, where we cover the latest in financial accounting news. Then we go to Credit Where It's Due. This is something that I really love because it's a personal profile where we get to meet someone in a big powerhouse in the industry, so you get to know how they're taking the theory and they've put it into practice in a real world example. And then what's important is Ledger Lowdown. And in Ledger Lowdown, it's a corporate segment where we evaluate an industry and we see how it works. So B is going to navigate All Accounting For with me, and you and I are going to get into this. It's going to be amazing. Listen, it's not about complex jargon. This is the whole point. You're going to hear complex jargon, but we're going to unpack it for you. It's not about it's a straight talk. That's exactly what it is, right? It's the numbers. We're talking straight talk. B, I have this story for you, and I'm sure it's something that you're interested in. This is how we kick it off with Bottom Line Bulletin. So here's the story. You might remember this at the beginning of August of 2024, just literally now, the Prudential Authority, PA of South Africa, they fined Sasfin Bank a substantial whopping amount of 210 million rand due to non-compliance with certain provisions of the Financial Intelligence Center Act, which is FIC Act. So the fine was imposed to enforce adherence to anti-money laundering, which is AML, and then counter-terrorism financing, CTF regulations, which are vital actually when you think about it for maintaining the integrity and the stability of a financial system. So this is pretty big. 210 million is not like a tiny little slap on the wrist. It's quite a big thing. Yeah. But before we get into it, we need to first know, who is the Prudential Authority? Are they like the ombudsman for us?
So it's actually such a cool comparison that you just made, because we can actually say they are exactly like that, right? They are a regulatory body that operates under the arm of the Reserve Bank, and their job is to ensure stability in the financial systems of the country, right? And they do this by, for example, developing prudential standards that then speaks to how financial services or financial companies within the financial services industry need to comply with. And interesting that they also don't work by themselves. So they work with the FSCA, or the Financial Sector Conduct Authority, as well as the National Credit Regulator in ensuring the stability. So as an example, the fact that you take your money and you go put it or deposit it at your bank, they now have to comply with rules that tell them how to manage that deposit, so that at any given point in time, if you now want to go and withdraw, they need to have enough liquid funds to be able to do that. So those are the kinds of things that the Prudential Authority looks at.
And that's exactly what this topic is called, All Accounted For. So what they're doing is to see where your funds are and where it is, so it's all accounted for. This is the session, and we're going to get deeper into this. So B, we've got this ombudsman. Then what in the Sasfin happened?
So
because this is big.
They allegedly laundered money via their foreign exchange business. And what was happening there is that employees, or certain employees within Sasfin, were circumventing certain regulations and rules in order to get kickbacks on the side. And then, as part of an investigation that then happened, all of these things came to the fore. And Sasfin subsequently did fire those employees that were implicated, and they did actually end all of those relationships that were actually on the dodge side of things. So I think we'll give them that. But what actually happened is then in September of 2023, yes, Sasfin's external auditors, PwC, they then submitted a reportable irregularity. This will be a concept that our auditing students would be familiar with. They submitted a reportable irregularity on the back of these findings by the Prudential Authority, saying that, these things are happening. And then later on, they then sent another report to the RIBA, or the Regulatory Board for Auditors, actually saying that they are of the opinion that the issue has then been fixed. And then following that, what happened is that SARS also wanted a piece of the pie, and SARS actually started their own investigations, and they found them, or rather they issued summons to the value of 4.9 billion rand. So Sasfin has been in a lot of trouble lately.
Whoa, 4.9 billion.
Yep.
Wow. That's a pretty costly affair. 4.9 billion. That's a very big pot, my friend. Huge
Yep.
pot we're starting with. Okay. So when I think about it, right, it actually makes me happy as a consumer, because I think this is something where consumers worry about, like, where's our money going? Is everybody being held responsible? Is everything being accounted for in that manner? And hearing that there was responsibility, hearing that somebody had to pay a fine as big as that, and having to spin it out to the tune of 4.9 billion, it kind of makes me feel rest assured. But then what do we learn from this then? That means that people have to tighten up their systems, make sure they're a bit more, they're aware of what their employees are doing behind their backs, completely transparent. What do we learn from this?
So it's actually such a good thing because that you're asking, because you're able to also see the direct impact that the work that the Prudential Authority has on you and I, normal consumers, right? Because they're essentially protecting us. And if
Yeah.
you did not have such bodies, the financial institutions would be running amok. And we know they're very known for being greedy, amongst other things, but it's so good that you have someone that can just, put them back in line as and when they get things wrong. So the Prudential Authority is extremely important in protecting, or not only protecting consumers, but also in ensuring the financial stability of the country.
Oh, amazing. Fantastic. So that is how we wrap up the first bottom line. Got a great story. I think if you want to go and read about it as well, please go. I think it's something that you're going to learn about a lot. They're great terms for you to pick up, but also an interesting story in how things were negated. Up next, we are doing credit where it's due. This is all accounted for, and we're breaking it up section by section. This particular one is kind of my favorite because it's called Credit Where It's Due. And it's where we highlight somebody who is a captain of industry, somebody who is a powerhouse and making some power killer moves. Today on Credit Where It's Due, we're highlighting a powerhouse in both the financial and beauty industries. As we know, beauty is massive. It's a big industry to be part of, and this is where billionaires are being made. Just recently, as of last week, Selena Gomez has just come through as the latest billionaire. As you know, she's in the Kylie Club when it comes to makeup and beauty. And I hope that the same journey will apply for Mathebe Molise. Now, Mathebe began her career as an investment banker, navigating the high stakes world of finance with absolute precision. But her entrepreneurial spirit led her to a bold pivot because she decided to disrupt the South African beauty industry. And you almost didn't see the correlation, because how is a banker now going into beauty? But she absolutely is. This is the level of multi-skilling. She founded an app called Beauty on Tap. It is a digital platform that connects beauty service providers with customers. If you think about how the Uber platform works, we're linking people together, and that's what she's doing. And Mathebe's journey from numbers to nails is a testament to the power of innovation and resilience. And I love that because I see so many people in the industry have this dual role. The duality is so important. They're able to do banking, they're able to do medical stuff, and then on the side, it's a hustle that's actually become as strong as their main interest. But B, you'll unpack this for us. Tell us about Mathebe's journey and what are the 3 key takeaways that you took from her?
So Mathebe, I like the fact that she was innovative. So now there's this whole thing about, going digital and all of these things. And I think she really, really did take advantage of that. So adapt and innovate, find a gap in the market and disrupt it. I think that's the first one. The second one is you also want to build trust with your customer base, right? In order for her to continue to retain not only her customers, but the brands that she works with, she obviously needed to emphasize the fact that she was a reliable service provider. So she was making sure that there's fast delivery, and just her marketing strategy is also very unique.
Yeah.
And I think a third takeaway is just in how she does that. You want to also differentiate your products and your service. And she does this so well in the way that she markets her products, right? She's very educative in the way that she markets. So she'll tell you what products go with what type of products to use for this type of skin. So I really, really like that. And I think a lot of her consumers really enjoy that. And it's part of a unique brand experience. And yeah, I think that also makes her to stand out in a very competitive market.
I love that she is an investment banker and she saw an opportunity. And I love that she was able to pivot so successfully and seamlessly because she probably used, I think for her in her favor, used her knowledge of banking and business to build that trust and integrity. Because people will go, oh, she works at a bank, or, she's got financial behind her. So she has a greater understanding of money, which of course is the bottom line for her. And I think that's going to be it's going to be her golden thread in success. So we wish her all the best. If you've never heard of her or you want to go and check behind the scenes, her name is Mathebe Molise and it is called Beauty on Tap. That, of course, was credit where it's due. B, you're like the Beyonce of accounting in my world. You seem to have it all down, girl. I love it. I love how you unpack things. And then you're going to give me the ledger lowdown. When last have I used the word ledger? I love it. Ledger lowdown. And we're looking at the banking industry. In this particular module, we're going to unpack how money is made. We're going to also look at the links because this is what's really important. We can teach you all of these things, but there needs to be a link to what you're actually studying so that it makes sense. We're going to give you context so that your theory and your practice go together. And in your pillars, what you're currently studying in accounting, we're looking at accounting, we're looking at taxation, we're looking at audit and ethics, and of course, management and accounting, finance and strat. All of that will be unpacked in these little bits and pieces in Ledger Lowdown. So B, let's kick it off with the banking industry. It's big. It's a huge thing to say. Break it down for me.
Okay, cool. So the banking industry, the South African banking industry in particular, is actually the biggest in Africa. So
Really?
these are big monies, yes, big monies, big industries, just also in terms of innovation and everything. So that's quite interesting. And also in terms of the number of people that they employ about 3% of South African income taxpayers. So that is a very important part of job creation. But job creation aside, they're also very important with regards to the economy because as the primary providers of credit, they then give people money to spend, and spending is good for the economy.
I think I'm so impressed by the fact that South Africa is like the captain when it comes to Africa and the continent leading in the
Yes.
banking space. So then B, if you could explain to me, how do the banks make money?
So they make money in a couple of different ways. I think the biggest one would be interest on loans. So when they give a loan to you or a business, they then make interest income as a result of those loans. And then other things would be different fees and charges, such as, for example, the fee that they charge you to maintain your account, or if you now have to pay a fee for an immediate bank transfer, or just an EFT payment, buying airtime, electricity, all of those things. Those are different income streams for them. They also make money through investments. So they use their own money as well as money that the depositors put in the financial institutions to then invest. And then as they make money off of that, that's also a different income stream for them. Another one would be insurance. So you get some banks that offer insurance products. So they will insure your house, your car, or whatever the case is. And then as you pay those premiums, that's also a separate income stream for them. And another one would be where they give advice to very wealthy people. And that's when they tell them like how to invest, how to plan their estates, and all of those things, that they charge a fee for providing that service. So in summary, it's those ways: interest on loans, insurance premiums, other fees, investments, as well as wealth advisory fees.
So as a kid, I loved Monopoly. And now this has made my Monopoly idea even bigger. Now I know, because I always wanted to be the banker. And now I understand why. Make the cash, man. So B, let me ask you now is what aspects of banking will link with your studies? I mean, you've spoken about, the different parts of the bank and how they make money. How does it link to the actual study?
So I think if we maybe take accounting as a start, right? If you think about all of those IFRS standards that you've been learning as a student. So if we think about, for example, IFRS 16 leases, if you think of a bank that has a very big branch network, like having branches in every major city. They will then need to lease some of those buildings, and they would then need to account for that in a manner that makes sense accounting wise. You also have IFRS 15, that's your revenue standards. So as we've discussed, they have different forms of revenue or different streams of revenue, and those would then need to be accounted differently depending on the type of revenue. So that's a very important standard for banks. And another one would be IFRS 9 and IFRS 7, right? So because there's financial instruments galore, they would then need to, for example, look at things such as impairment losses. They would have to look at things such as when do they expect to make losses when it comes to such loans, as well as also how they disclose all of these matters relating to these their debtors book or the amount of loans that they've given to either yourself or a company. So all of those standards would be extremely important in a bank. It's not to say those are the only ones that are applicable, but the entire IFRS as a collective would apply, but then these are some of the very important ones.
And then, of course, there's IFRS 9, 16, 15, and 17.
Yes.
Okay. Awesome. Next, a buzzword. We've been talking about this. It's been coming up in social media. Taxation. How it works, how it impacts, that we will unpack next. So now we're talking taxation, okay? In South Africa, banks, of course, are subject to the same tax rules as other corporate entities. So the standard of 27% at the time of recording of this particular video. But these are specific, there are specific tax considerations and potential exemptions that, of course, will apply to them. Can you tell us about some of these deductions?
So they'd also apply equally to other companies as well, but I just want to kind of help the students kind of make a link as to what it would look like within the banking industry in particular. So if we think about Section 24J of the Companies Act, right, banks are then able to claim the interest expenses that they incur on the funds that they lend to customers. This then helps them to reduce their taxable income. And then another deduction would be Section 11I. This is also relevant because earlier we spoke about IFRS 9. So this is also relevant standards because it says to the banks that they can basically deduct amounts that are unlikely to be recovered from customers. So these standards, IFRS 9 and Section 11I, those actually link up nicely together. And then also another interesting thing when it comes to VAT is that banks are generally exempt from charging VAT, right? Because it's mainly financial services that they provide, and that is VAT exempt. The students would know that a bit of that, but they do then pay VAT on other goods and services that they purchase. And like any other business, that can sometimes they can then sometimes claim input VAT on that. And I think another one would be, for example, when it comes to bonds, governments can then come in and say, we want to encourage banks to fund certain projects that are of national importance. So if you then buy government bonds, you can kind of get a tax break or something like that to say, yes, we're rewarding you for kind of investing in the public sector. So something like that could also then apply. And I think, like we said, all the other stuff also applies, but this is just something that I just wanted to highlight to the students for them to think about.
Yeah, I like that when you wrap up the tax consideration that allow banks to manage their tax liabilities effectively, of course, with compliance with the South African tax laws. It keeps bringing me back to the whole situation with Sasfin. This is why it's so important to have that transparency and just making sure that everyone is adhering the way they do so that they avoid the massive slaps on the wrists. That, of course, is a little touch onto taxation. Up next, we look at audit and corporate governance. B, we're in the topic that talks about audit and corporate governance. I think this is so important because people want to know that we are governable. People want to know that we are accountable and that there is a system that will protect us, right? When we talk about the big banks being audited, I was like, yes, it's important for banks to also be audited, just like us as general consumers. Can you walk us through considerations that are done in this process?
So I think we touched on it a bit earlier in your introduction when we were talking about reportable irregularities. So that is something that the audit firm would then need to do. the students would be well familiar with this process because it is actually part of their studies. But just out of interest sake, you get the big four banks, or rather the big banks are audited by the big five audit firms in the country. And it's also quite interesting that they got unqualified audit reports in their most recent financial years. So I think finances wise, they're doing really well in kind of presenting a clear picture of what their operations really look like, which is also then good for us. And then in terms of the amount of money that the audit firms would then make, depending on the type of fees that they're charging for, could be from anything to 20 to about 200 million rands that the banks would need to pay to the audit firm. So it's a very big industry. It's a very big business. And I think also ethics wise, that they've had some issues in the past.
I know. In the past 2 to 3 years, I mean, the fact that you brought up Sasfin, I always think like, okay, that was a big one. What examples do you have of ethical boo-boos?
So we had, I think it was Standard Bank in recent times was criticized because they went and
It's my
are
bank.
they your bank?
They're my bank.
Well,
Okay,
your
tell me what
bank
they
went
did.
and closed and closed some NGO accounts for whatever reason. And the issue there was just as it relates to ethical banking. Like if you're going to close the accounts of NGOs, like what are you doing really?
Yeah.
And then you've also had Capitec. So Capitec's client base is low to middle income class people, but their loans are extremely expensive. So they will charge you very high interest rates. And the question of that is that, how do you balance
Mm.
making money with also doing the right thing for the community? And then you also get F&B that's also been in the news for having very subjective interest rates. So depending on the color of your skin, you would then get either a preferential interest rates or not.
I'm shocked. They
And I
profiled
think
people.
yes, they do exactly that.
Wow.
So yeah, Nedbank also had quite a similar issue. So you do get some of these issues within the banking industry.
And I think this is why auditing is so important. This is why the auditors also play an ombudsman type of role to make sure and to ascertain that we're all okay and that people are literally accounted for. And then we know where money is going. And we also know that we're doing it in the correct way, in an ethical manner, so that we don't have incidents like this. But yeah, excellent examples
Absolutely.
for ethical boo-boos. How
And
interesting.
And I also just wanted to say that it's also important for the non-auditors as well. So the people that do work at these banks, that do make these decisions, it's also important for them to understand just the concept of ethics, right?
Yeah.
Because you don't need an auditor to come tell you you should not be overcharging poor people for their loans. So as we have these discussions, even within the degree, this is what we're trying to do with our students, trying to sensitize them to ethical, potential ethical dilemmas.
Yeah. It's important to be conscientized when you think about these things. And I think it isn't just about the facts and the figures. It isn't just about numbers. In between those gray lines, it's about people. It's about keeping people in business, because they're, at the end of the day, without these consumers, you're not going to have this business model to even start off with. So if you take care of that, I think then it just makes complete sense in the bigger scheme of things. Fantastic. Thank you so much for wrapping up Audit for me. In our final session of All Accounted For, we're going to look at the subject of management accounting and finance and strategy. So B, let's bring it home. Let's wrap it up with this particular section, and we're calling it management accounting, finance and strat. So there have been so many concepts learned in MAF or MAF equally to banks, and they would apply to other companies. What are some of the notable concepts you would say would be for a great example for us to look at?
So if we look at the concept of risk management, right, if we think about the fact that the banking space operates in a digital kind of space, so they would need to manage things such as cybersecurity risks.
Yes,
So
it's
that's
huge.
a concept that they would have to look
Yeah.
at.
Like
Exactly.
phishing, when you go into your banking app every day,
Yes.
did you get it seriously? Check phishing, because it's so
Yes.
easy when you're in a hurry to click something and then you know you're in the scam. And we know this. Cybersecurity is such a hot point right now, and I think we all need to be so educated on this.
And it actually makes sense that they'd be so invested in teaching us as well,
Yeah.
because now if you lose your money, you're going to go to them and claim to say, yeah, well, I lost
Yeah.
my money. Now they have to claim through their insurers, and then it becomes a big thing.
Listen,
So they're
my
actually
and
so
cloning,
invested.
yeah, and cloning of cards. I remember
Yes,
when
so many things.
I got cloned. I'll never forget this. And then I could see From the bank, the audit department and the special investigator could see that this person was taking the card from
Yeah.
this mall to this mall and I was stationary. I'm like, I'm not even in that city. How did it goes so quickly and it
Yes.
happens so fast? So please be aware of where you put things, how I'm super pedantic. I'm always checking behind me, but also like scams happen, especially when you're online. All it takes is a late afternoon,
Yes.
you're driving, you quickly opening up your bank app, you check something and and boom, something like that. So it's very important to be aware of these things. And I'm so glad we have risk management in place, to be honest. It saved
Yes. So
me
they
so
have to
many
be
times.
proactive.
Yes.
Imagine if there was a bank that just reacts all the time. They don't know what's happening, what the scammers are busy doing. So they constantly need to sit and, evaluate what kind of threats are available and how to then counter that. So that's a very big
Mhm.
portion of their work. And then another one would be where they have to manage their working capital. So for example, if you think of Capitec Bank with a lot of customers where people have to then withdraw money and then deposit money on a daily basis.
Mm.
Capitec needs to make sure that at any given point in time, they do have enough money available so that if I then go and want to withdraw my 200 Rand, my 200 Rand comes out.
Yes.
Because if they're not planning that portion properly, then I'm going to go withdraw and then money is not going to come out because they're not planning that aspect of their business properly. So that's also a very important aspect. And I'm also thinking now of Nedbank. So Nedbank has this thing where they, it's like green banking, right? So they basically, the concept of sustainability is very big now.
Yeah.
So green financing, all of those things. So that is such an important space right now where we're kind of figuring it out as we go. So the fact that Nedbank is also innovating within that space is extremely, extremely important. And if they're then looking at lowering the cost of capital, they would then be able to get kind of alternative sources of funding because they're in such an innovative space. So that's really amazing.
Oh, they're
And
getting
then
rewarded for doing good things for the environment, etc. And
absolutely, absolutely.
that's pretty
Because
cool.
if you had like a lot of money, right, that you wanted to invest in something, and there's a company like Nedbank that then, is into the green space,
Yeah.
and another one that doesn't necessarily care for the environment, which one would you be more likely to invest in?
Yeah, I'm with the company that does
Nedbank.
responsible things. Yes. Yeah, I want to give back. I want to make the
Absolutely.
world a better place. Yeah.
Absolutely. And then as you also look at kind of banks like APSA that are trying to expand within Africa, so all of those kind of considerations that they need to have about where to, which country to go into, how they're going to do that, that's also concepts that the students will be learning about within strategy as well. So there's quite a few principles, but these are just examples of some of them.
Oh, fantastic. Bee, that's where we leave it. I can't wait for our next edition of All Accounted For. I've learned so much today. I'm going back and I'm looking at my banks all over again. I'm like, you've been naughty. You've been very naughty. But it's important for us to be aware of this. It's important for us to be conscientized and being, read the room, understand what's going on. It isn't just about learning all of these things on theory, but to see how things are happening in real life and real world practices. That is what All Accounted For is all about. My name is Sush. We can't wait to catch up with you and myself, Bee, in our next edition of All Accounted For, brought to you, of course, proudly by Boston Media Broadcasts.